Hey everyone, this is a trader investor. This morning I want to take a look at the markets where we're going to open. It's an interesting day because a non-farm payroll report came out this morning at 5:30 a.m. Pacific time, 8:30 a.m. New York time. And what's interesting about it today is the report came out at 266,000 new jobs added. The expectation was 990,000. So the markets then, based on this, should go down, right? This is saying there's weakness, the economic growth is slowing down significantly, and if there's weakness, we expect the market to collapse. But what do the markets do? Sometimes the markets don't care. You know they don't care because here's what is happening. When the report came out, the ES futures had 18 points movement up and down, but then they quickly recovered from that, and now they're just playing around, and they're higher than yesterday's futures close. And so if we look at the SPY, then the SPY is closed here, but again, as you can see, the pre-market action, the price is much higher. So why didn't the market care about this bad report? Well, sometimes the markets do what the markets do, but also it appears that the 10-year bond is going to fall. I think it had fallen at one point significantly after that report came out, but it's starting to recover. So this makes me believe that even though we are in this territory up here, we might have a down day. If this 10-year bond keeps rising, this ES is going to keep dropping. The market is going to keep dropping. So that's what is going to happen. We have yet to see that action. So let us wait and see what happens. We don't trade expectation, we trade actual charts. So whatever the charts are telling us, that's what we will trade. In the Qs, a couple of days ago, I mentioned about this imbalance that is still left hanging. Well, it looks like we're going to close it because we have less than 8 minutes to go for the markets to open. So it looks like this imbalance will be taken care of this morning. In the IWM is staying put. IWM is not having a gap up. We're still going to have this imbalance left open, left hanging. So what this again is a caution sign for me. If IWM is our leader, that's what I use as my leading indicator for the broader market. If IWM is strong, if small caps are strong, then the overall market is strong. If IWM is weak, we might not see the overall weakness quickly, but that's a leading indicator. So in a couple of days, the others will follow. So IWM is not in a hurry to open above yesterday's close, not in a hurry to close this imbalance. Therefore, I'm again very cautious. So as the markets open today, even if we are open here, I'm expecting we close this gap. We might even close it further down. And also notice that in the SPYs, we have this imbalance. I like to draw this perfect. Sorry, that's what I just like to do. We have this imbalance here. Because we have this imbalance here, we could come and close it and reverse, or we could just blow right through it. Right? Any of these could happen. So we have to be extremely careful as we are entering positions, as we are looking at how we're going to take care of the market, because this imbalance a lot of times gets taken care of. As you can see here, last week on Monday, Tuesday, we left an imbalance open, and by Wednesday we have already taken care of it. So this is where the markets are setting up. Qs have closed it. IWM doesn't want to close it. The diamonds, there's an imbalance left here as well, same like SPYs. There's this imbalance here that we need to take care of, and this is where the pre-market price, as you can see now, and the diamonds is down here. So diamonds have very short distance to cover this imbalance. And what will happen once we cover this balance? This is what we want to see. This is what we want to trade. We want to see action like yesterday, where the 15-minute range tells us a clear direction, VWAP tells us a clear direction, structure tells us clear direction. Break of structure is what we want to trade. We don't want to have a day like Monday, where it was very narrow range and difficult to trade. We don't want to have days like last week, where we had small ranges, with the exception of last week Thursday. So we want to be careful as we enter option expiration Friday. It could be some wild movements, and so let us pay attention to our levels for all of them. Let us pay attention where we are. Let us also see where the 10-year is, because that 10-year is starting to recover. The VVIX, I want to take a look at the VVIX, because I want the VVIX to be below 110, definitely below 120, below 110. This is a sign of strength for us, for the overall market. If I go to my daily chart and look at put call ratio, the put call ratio now is signaling some warning signs. What does put call ratio tell us? What does it mean? It means the number of puts divided by the number of calls open in the markets total. What that says is when people are fearful, they buy more puts. And by people, I don't mean only retailers, also institutions. So when there's more puts, the markets could be heading down, because that's this indication of fear. When VVIX and put call ratio are both yellow for me, meaning above my thresholds, that's a sign to watch out for a short participation. So put call ratio is already there. VVIX, it's working its way there. Of course, yesterday it gave back some points, but it's very close to 110. UVXY is dropping, but what will it do today? I think that would be the telling sign, is what is the significance of UVXY today, because the ES is starting to show some weakness. The ES is starting to show some weakness in the 15 minutes, is starting to drop. So we were at one point, I think, above 14. So we want to make sure that we continue to watch it. We continue to watch what it wants to do. Yesterday's high, yesterday's close. Does it want to go below that? We have yet to see what happens. It's very critical that we see that in the ES. There's an imbalance left here. Does it want to close that imbalance? Because once it wants to close that imbalance, then we're off to the races on the downside, and that's what we don't want to see yet, without us being prepared, right? We want to participate in any downside move. We don't want to just wake up and be surprised by it. So what do I mean by participate? What I mean is we are ready. We are looking at the chart. We are waiting for the charts to tell us, does it want to close this and reverse, or does it want to close this and continue down? Does it even just barely touches it and reverses, comes back to test it and reverses. Have a W formation here as an entry. We want to take a look at all of this because what gives us an indication that the markets are done pulling back is a break of structure. If there's no break of structure, then that pullback continues. If we keep making lower highs and we don't break this structure, if that last one does not exist, then what it means is price is going to continue to do this. So let us be prepared. Let us participate in this downward move if it happens. If it's not downward, then we continue our way up. So the markets are opening up in a few seconds, if not already just opened. I think they just opened. So what is happening? Let's just make sure we're taking care of that. All right, everyone, I will make another video. Don't forget to like this one, and I'll come back and analyze the markets, how they ended the day, how we ended the week. It's going to be a pretty interesting day. All right, everyone, take care, and I'll see you in the next one.